All right, good morning, everyone. It is now 4:18 a.m. and today is March 23rd, 2023, the day after the Fed speak. I want to title this video, Taking Emotion Out of Trading. Technicals, folks, if you understand how to use technical analysis, it definitely can give you some insight as to what we can expect as we go throughout our trading day, our trading week, trading year. Pay very close attention to certain technical tools, especially when you see a trend that has been broken. And one of those ways that I really like to, monitor trends after a pivot point is by using the 20-pip moving average. So this yellow line, as you see, I have on my screen, that's my 20-pip moving average. What you're looking at now, I'm going to be looking at the futures. This is the Russell 2000 futures daily chart. And what I like to point out is that every time there's a trend change, pay close attention to this 20-pip moving average. So I'm highlight a couple areas here and show you guys how important that 20-pip moving average can be once you spot a trend change. Normally, price action will continue to follow that 20-pip moving average until it reaches a pivot point. And one thing I'm going to show you guys here is that every time we see the 20-pip moving average overtake price, normally there's a continuation of that movement to the downside for quite a bit, as we've seen here. It was back in August of last year, 2022. Price action hit a high, dropped below the 20-pip moving average, and as you see, the 20-pip moving average continued to act as a level of resistance for quite a bit. Price action came up here, dipped below, above its 20-pip moving average, just quite a bit. Just a little, that continue right down. We did not see this 20-pip moving average turn up in a massive way, signaling a continuation to the upside. What happens? We hit that 20-pip moving average, come right back down. Now, the only time we started to see some kind of a change was right around here. See price action come down, hit the 20-pip moving average again, come back down. Then we see this long wick right here. Normally you see these long wicks, normally that's some type of sign of a possible reversal. This is a daily chart we're looking at. So what happens? Price action jumps up, back above its 20-pip moving average. Now looks what happens. 20-pip moving average starts to turn up right here. And every time price come down and hit it, it bounces off of it until we get here. Then the 20-pip moving average starts to bend lower. And then we see a strong cluster of candles. And that's when I really pay attention. When I see a strong cluster of candles start to formulate or start to consolidate right around this area here. There's strong cluster of candles many days in a row consolidate around this area, which means this is either going to be a strong area of support and we get a bounce, or this strong support will lead to a move down. But what happened? Build some strong support here and we got a bounce. What happens? The 20-pip moving average starts to turn up again and becomes a strong level of support for a short period. As you see here, a bounce from that level. As you see here, a bounce from that level. Then we went to an extreme bounce. Extreme bounce here. Look what happens. Got a extreme bounce there. Not only we get a bounce, but price action was overbought during that time period. Pour this out again. So the price action got severely overbought, as you can see by looking at the RSI at the bottom. Got severely overbought. You see this gap in between here, between price action and the moving average. Moving average, price action don't like be too far away from moving average so long. That was a strong gap up, leading me to believe, after you look at this RSI, that we were definitely in overbought territory. So what's more than likely to happen? This is a reversal pattern. We get that reversal. Hence is where we are now, in the midst of that reversal. So what happens? Price action comes down, makes an attempt to hold support at the 20-pip moving average and fails with this big long wick here. After that failure, I start to look for a turn in the moving average, which is what we had. Look at the 20-pip moving average start to turn lower. After we got this break here, Now the 20-period moving average is acting as resistance. Look at that, perfectly. Resistance, up a little bit, resistance, and then not only did the 20-period moving average continue to trickle lower as we hit this resistance, we actually also broke through a major level of support that we saw here. We broke through that level in a major way. So now that we broke through that level of support, we got multiple ways to feel confident about price action moving forward. This level of support right here that we broke back here is going to act as a strong level of resistance now. Now we are below this level. And look what's happening. The 20-period moving average is starting to ride price down. And every time the 20-period moving average ride price down, especially after a major break in trend. This is a major break in trend right here. When we broke below this level of support. So now I can feel confident that as long as we stay below this level of resistance and below those level of support now, and the 20-period moving average is still on top, every time we get a rally, we're probably going to run into the 20-period moving average and see the same things we've seen in the past, such as, go back, what happened here? Hitting the 20-period, going way up, right back down. What happened here? Hitting the 20-period moving average and coming right back down. And what happened here? Hitting the 20-period moving average, coming right back down. I think that's what we're going to start to see now. Now that we got that established, that's a good way for you to take your emotion out of trading, because what most folks will do is that they'll see what's happening now in the pre-market with the markets are up. It's pretty substantial, you know, up over 1%. That's what the Russell right now is, up over 1%, but it has not gained any big ground, because after that big drop we seen on yesterday, this big red candle, it has a lot of ground to make up in order to overtake that red candle and break through this 20-period moving average to show some strong strength to the upside. So any rally, it has to overtake. I mean, it has to be a strong rally. It has to overtake this 20-period moving average and also overtake this level of resistance that used to be support. So for you short-term traders who are trying to take a quick bounce, you know, to the upside, that's fine, but you got to look out for overhead resistance, which is definitely going to be where price action fell from yesterday, above that candle, and then you have to deal with that 20-period moving average, and you got to deal with this overhead resistance. So this gives me more confidence to believe that we're going to see what we've seen in the past. The 20-period moving average is going to continue to ride price down, which means every time we run into that 20-period moving average, we'll see price ride down. Great example by looking at what we've seen from back in 2021. Back in 2021, then we hit that 2460 on a Russell futures, and the 20-period moving average just continued to go down. Continue to go down, continue to go down until we got about right here. That was a long downward move. If you continue to just follow this 20-period moving average, you would have been able to stay with it, you know, feel confident in the downward pressure of the market until we hit this level back here. So that's one good way to take emotion out of trading, folks, is to pay close attention to breaks in trend. First of all, looking for the 20-period moving average start to turn downward. You see gaps between price action and the moving average, 20-period moving average, and you see resistance, support that used to be, support that is now broken and becomes resistance. So from a support, once broken, becomes resistance, and you see the 20-period moving average continue to ride down. So if I was a bet man, I would, you know, warn folks that now the 20-period moving average is in control of price action. Don't fall too in love with these rallies on this daily chart, because this 20-period moving average is running down in a strong fashion. And my guess would be every time we get these rallies, 20-period moving average is going to continue to come downward, and it's going to run into price action and push price action right back down. So just wanted to throw that out there. Give me another example by looking at the very quick example by looking at the Dow Jones futures. Same scenario. Look what's happening. And this is perfect action. Take a look at. We got a rally up here back in October, but look what's happening now with price action. Then we started to stall out. Pretty much price action just stayed right along this line that I'm drawing, and then all of a sudden you see the 20 moving average turn lower. So now we got confirmation that this 20 moving average is now starting to ride price downward. So every time, unless the price action gets above the 20 moving average in a major way, we just saw a trend shift, folks. So no matter what you see in pre-market now, unless we get a huge rally, a couple thousand points, I just can't see anything that the pre-market is showing is turning into a strong bullish move throughout the day after the opening bell. So that's something to pay close attention to. So again, the 20 moving average is acting as a strong level of resistance now, as you can see here. So we got this bend here. It's definitely acting as a strong level of resistance. Look at let's look at crude oil too. See this? Sorry, not gold. I'm trying to do crude oil. So hold up. Look at crude. This is one thing that's concerning me about crude, because last time it's happened in crude, when we got a big reversal and trend and a break below a level of support, it was bad for overall markets too. So this is what happened with crude on this week. Crude was in this nice strong sideways pattern for since December 2022. And all of a sudden it broke below that pattern, folks. See that break? So now former support, okay, former support now becomes resistance. That's something to keep an eye on today, because we see a move up in crude right now, but it now has to deal with this break in trend. After we broke below this level of resistance, which I mean support, it now becomes resistance. And now we also have to deal with the 20-pip moving average. So now, as price action goes up, unless this 20-pip moving average turns up in a significant way, more than likely we're going to see price action start to become muted in crude somewhere around where we are now, somewhere around this level. So in between 70 to 72, we can see price action stay muted right around this level, unless the 20-pip moving average turns up in a major way. We'll run up into this level somewhere around here, and we're going to probably see a big reversal to the downside unless we break this level of resistance down in a major way. We can see crude get rejected between where price action is trading now to up around 71.50 to 72. This definitely helps. So when you see these breaking trends and you see the 20-pip moving average start to ride price down, you definitely can take emotion out of trade and just stick with the trend until we see that change, until we see the moving average, 20-pip moving average start to reverse back up in a significant way, and we start to recover back above some of these levels of resistance, on support resistance levels. Just stay confident in that movement. So crude looks detrimental right there to me. It looks like it's going to struggle to get above that 20-pip moving average and back above that level of resistance. Now, let's look at the VIX first. VIX futures. And it's just showing us the opposite, folks. So here was a long-term level of support that the VIX was showing. Right down here, right around that $18 level. That was a strong level of support. And I really tested it in a major way. I mean, we tried to get down to it right here and right over here. We finally got down to that level. Right around here, around the beginning of the year. So we started to really, trade almost pretty much stayed down around this level for quite a bit, from the beginning of the year until now. And then what happened? Look at that big bounce we got off of that level of support. Right around here. Got that big bounce. And now what happens? Now, unlike we've seen before, 20-period moving average was pretty much in control of price action, and this level of resistance up here is also in control of price action in the VIX for quite some time. So every time you would see a strong pullback in the VIX right here, then we get a pivot point, VIX goes back up, runs into this level of resistance up here, and look at the 20-period moving average. You see the bend. See the bend, and we start to trend lower in a major way. So we got 20 price action broke the 20 per here. Look what's happening now with the VIX. Let me get rid of these because I might get rid of these. Look what's happening now with the VIX. VIX futures. Got that big ricochet back above 20-period moving average. And now the 20-period moving average is doing what it does. It's now acting as a level of support, folks. A level of support. Look at that. We pierced below it just a little bit on a couple just a few days ago. But the 20-period moving average did not falter. It stayed, even though we got this big red candle that popped below it on this daily chart. The 20-period moving average stayed neutral. It just continued to, to go stay neutral and hold price action. So we got that drop below it, price action dropped right back above it. And now here's where we stand now. 20-period moving average is still holding firm, and it's not bending, folks. It has not bent lower like here. It has not started to bend lower. So this tells me that this is more than likely a strong breakout to the upside as we broke this level here. So now we are back at pretty much a level of resistance. So this is right around here where price action bent here. That's where we are pretty much at now. And we are holding that support level pretty strong. So what would make me believe is that this breakout was a confirmed breakout. And now we are testing the level of support right around the 20-period moving average. What I suspect to see is price action to hold somewhere around this box. Then we'll see the 20-period moving average start to continue to go up as the VIX continue to bounce. That is positive for the VIX and negative for our markets, folks. So keep that in mind. VIX had a major breakout here recently above this 20-period moving average. Now the 20-period moving average is no longer acting as resistance as we did here on the way down. It's now acting as support, meaning that, folks, no matter what you see in pre-market, be careful, because the overall market is under subjection to price action, that the bears are going to put this pressure on overall market. So I just showed you guys how to take emotion out of this trading. Pay close attention to these pivot points. Pay close attention to price action being broken below levels of support resistance. And once this 20-period moving average reverses course, pay close to what it does. It would normally ride price action either up. Again, so it would normally ride price action either up until we get a major break back below that 20-period moving average, or it will ride price action down as we saw with our Russell futures. Look at that. Again, or we'll ride price action down, folks. So after we got to spin, now 20-period moving average is in control of price action. So every rally we see up to this thing is gonna act as a level of resistance, because now price action is under subjection and has to adhere to that 20-period moving average until we see a trend change, especially after a major break below. Oops, didn't want to do that. Especially after a break below a level of resistance. All right, now let's look at same thing. I mean, it applies to anything, folks. Even in gold, I told you guys the gold was in a channel. It's an upper channel, and this channel is pretty strong. And one thing I'd like to point out here is that even though we see the VIX, I mean, we saw price action falter here from February to March, price action stayed within its channel. So we see short movements of the 20-pip moving average lower, but this channel is a strong channel. So we can continue to believe in price action in gold, even if we see the 20-pip moving average start to bend, until we see a major bend. So we see in a longer term downtrend of the VIX, of gold. From this point again, price action does not like to be too far away from the moving average. So that was a big spike. That was back in March of 2022. And then after we saw that spike, what happens? We see downward pressure, and we'll have, look at the 20-pip moving average. It continues to ride price action down until we hit a major pivot point right here around 1618, which we saw back in November of last year. And then what happens? 20-pip moving average takes over again, rides price action up to the top of this level of diagonal level of resistance, or this trend channel. Stand above this 20-pip moving average in a major way until we get around February of this year. And what happens? We get a little slight pullback, almost at the bottom of the range, the upper trend channel. Then what happens? We get another bounce, folks. We get another bounce. So that leads me to believe that now the 20-pip moving average is going to take over again, as we see the 20-pip moving average turn up and act as a level of support, and support this price action in gold and continue to ride price action back up. So again, once you establish, support resistance, trading channels, you can use that 20-pip moving average as a gauge as to where we can see price action continue the trajectory, and we'll see price action continue. Here is a perfect look at a reversal and 20-pip moving average start to take over on this silver chart. So here we see silver got a little started trading within a range between December and February. We broke below that level, broke below that 20-pip moving average in a major way, and all of a sudden get a gap down below the 20-pip moving average away from price action. So there was a gap in between price action and the moving average, 20-pip moving average. And what happens? We get a ricochet right back above the 20-pip. Now look what's happening. 20-pip moving average turn right back up, starting to turn into a level of support to support price action. We're temporarily in overbought territory now, so will not be surprising to me to see price action come back down towards the 20-pip moving average. And then let's see if the 20-pip moving average continue to act as support, which I believe it will. Look at a longer term chart. Look at that. Perfect reversal right here. 20-pip moving average is starting to hold on this weekly chart and looks like it's ready to start to turn up. So folks, just wanted to point it out there real quick, show you guys how to take emotion out of trading. Hopefully this is something you guys can use. And I think I've covered all bases here. So until the next video, Tim Davis is signing off. Enjoy the rest of your day.